Awesome. Alrighty, guys. Welcome back to MTVTA. I'm your guys' host, Trent Manager. All my returning patrons, welcome back. All my new viewers, glad to have you guys here. Thank you guys for chiming in today. Well, it is another Monday, guys, and I'm really glad to be here bringing these videos between our live stream days of Tuesdays and Thursdays. Of course, we will have our Tuesday live stream and our Thursday live stream tomorrow. But definitely wanted to make an earlier video and kind of just cover the price action today, as we did wake up to quite a grueling bloodbath. Things are not looking all that hot, and you know what? That's okay sometimes. It's kind of great here, and not the noise, and it's really great to kind of just relax sometimes, even though this can definitely stress you out. So really hopping in here, guys. I kind of wanted to go over some thoughts. What's going on? Why is this happening? What can we expect in the future? What exactly is going on? And I'm gonna kind of hop in here and break some of these things down for you guys. Realistically, so we've seen a lot of fun articles and just a lot of just overall just really not good news, and not even good news in the terms of bad news all around. Just the bad news is just outweighing the good news. That's always how it is with media, guys. And everyone just likes hearing a bad story, and everyone just likes it's so weird. Like, people just enjoy negative news more than they do positive news. So it really does, it is really weird to me. But going into really what is causing some of this slippage and the issues that's arising right now, we have seen that that Bitcoin mining hash rate has dropped significantly, a really good amount. If we go over here, we can see that we went from about 190.5 million about May 9th to about June 20th, only doing about 104.04 million. So with this being explained, if we go back over to the article, we've seen the crackdown of China mining, and really them putting their foot down now in terms of, hey, we're really serious this time about, we really don't enjoy this too much. And, if you've been around for a while, you know that China's had their fair share of talks of Bitcoin. They ban Bitcoin every other month or literally every other day. It seems like we're reading about China and their issues that they have with their people having basic rights to mine and to basically just do basically anything. It's very cutthroat in China in terms of what you can and cannot do. Most of you are very aware. So really going down and kind of lightly covering this article and really getting the really core out of it, is that they're cracking down with not only just crypto exchanges, banks, regulators, everyone that is involved in cryptocurrency is getting a pretty rough shakedown in terms of making sure there's nothing illegal, going on, laundering accounted for, and so on. Just making sure everything is really on track. And with that being said, a lot of miners, big pools and smaller pools, have decided, hey, we're going to get on out of here and we're going to take our mining elsewhere, and we will continue our journey somewhere else. So we talked about Texas opening up their blockchain laws, and about all their renewables and solar energy powered, and a lot of these not EV farms, but green related cryptocurrency farms for mining proof of work coins such as Bitcoin. We've seen this narrative continue. We saw the law come into play, and they are openly welcoming miners come and mine in their state, as we're really starting to come around with that green narrative energy. So really, we're just in a big transitional period. We're seeing this really big crackdown now. We saw the hash rate drop from miners not being on the net. So when GPUs are not connected to the net to mine Bitcoin, in terms of using their CUDA cores to solve these algorithms, that's where we see a fall in price when block sizes are not as big, and also we don't have the demand of buying. It's a very scary time for most people who are not taking the time and education to be on here like you guys are, may not understand and may get very shaken out by this, because they do not understand what's going on and why things are the way they are right now, especially price action wise. So in terms of really, let's hop into Twitter real quick. I had some really good Twitter background. I kind of wanted to cover this ETH just quickly. That over number of addresses holding over 10,000 ETH just hit a new all-time high, which is absolutely amazing. So this is the stuff that you see and you don't really hear about too often from individuals, and such as good news that the adoption is still going on. The crazy thing is that when institutions and these big guys miss the boats, oh, we missed the train, oh well, we'll just wait for the next one. No, they bring that shit back, and they say, nah, we want to come back, and we want to make sure that we can get our fair share. We've had live streams also, guys, that we talked about that we prayed for institutional investors, we prayed for these big guys to come in and boost us to the next level. But at what cost did we not really understand is that these guys don't really care about you, and they never will, or they never did or never will. So they're trying to do the same thing you are, with their companies and their hedge funds and their families. They're trying to put themselves in a position just like you are to either buy your house or support your family. They're doing the exact same thing to hedge themselves about exactly what is coming. We've talked about the inflation rates, how much money we printed, what's going on, commodity assets that you can hold to hedge yourself against your dollar. We know that you put $10,000 in a savings account, you leave that there with your 0.30 APY on top of the printing of that we've had for the US dollar, you are going to have significantly less buying power from that $10,000, and overall it's just going to buy you less, and it's not going to be nearly as valuable, and that's not anything you can control. So going back to my narrative, of course you're like, oh well, hey, Bitcoin's super volatile, and did you not see the price? Like, man, like, dude, what do you mean? But that's not my point of what I'm trying to come out here and say. I'm saying that, regardless, of the price action that we see, and the of Bitcoin, being down and up, and not being super predictable, one Bitcoin is still always one Bitcoin. It will be pegged always to one Bitcoin. Instead of your dollar, you have no control over. You go to work, you come home, your paycheck, you get your paycheck instantly in your account, and you don't spend that, you put that savings account, it starts diminishing because you have no control over how much the Fed is printing. They're doing what they think is best for us, and that ultimately we've proven in history. We saw with Rome, and we've seen with all these other, even ancient civilization, even in more modern times, that you cannot print unlimited amounts of currency and expect it to solve your problems. We saw that with Rome. Rome scraped off, I think, 0.05 of their gold coins to save on their currency. So they would scrape off 0.05 of their coins every circulation, and they did that for hundreds of years. So what happens after you do that? Now you have all these bronze and dirt coins that were supposed to be gold, but since you shaved off 0.05 every single year, it now becomes worthless. So that's a good reference I like to use. And really going over, we haven't talked about the Wyckoff distribution too much, but I'm really kind of getting into it lightly. And I'm going to go over to an article kind of just, lightly explaining that for those who really are interested. This was brought up a couple months back actually, by an individual called Uncomplicated. Check out his YouTube channel. He's really good. I've actually given him a follow for the past couple months now, and I really enjoy his content. But if you look at this chart here, this is the Wyckoff accumulation phase. So we're going to look at this first. So just take a quick glance at this and kind of see where we are, so you can see that this down, up, down, this is the accumulation phase where people, you're starting to accumulate in these lower ranges, in the expectation for us to move back up. So now let me take this off, and now let's look at the Bitcoin chart. So if we just look side by side, that's pretty similar, huh? That's pretty darn similar, right? And I'm not one for conspiracies, and this is not a conspiracy at all. This is a technical analysis play out, and we're going to hop in the charts before we get off here too, and kind of see our levels and what we need to do, and kind of both some bullish and bearish outcomes. I like to give both scenarios for you guys, but let's kind of do this as well, look back and forth. It looks pretty darn similar, right? So there people have been chatting and saying, hey, we might be in this phase, right? We could be ready for a blast, or we're maybe in this phase over here, right, for that fake out then breakdown, or maybe we're still back here. No one really does know, but I want to get this instilled in your head, and this is a very common technical theory, and this is played out literally almost identically perfect to what we are talking about right now. So ultimately, where I'm sitting with this, guys, we know why we're here. We're here for the long term. We don't need to look at price action daily. I just choose not to, because it's just no point. I've been doing this a really long time, and I just don't feel like it's necessary to look daily when you're in here for the long term. Long term, I mean 12, a year, 2 years, 3 years out. You do not need really to stress about daily short-term volume trends and trades. But getting back to the Wyckoff distribution, this is a pretty similar pattern that I think is really important, that I've been paying attention to for the past couple weeks. So we will see, definitely how this plays out over the long haul. And yeah, guys, I really think this is important for you guys to see, because it really does give a different narrative in your head, kind of about how these bigger guys can be very lucrative and very smart about what they do, and how they combat these assets. And I'm gonna be real, guys, they want you shaken out, and I'm not just saying that from a person who just got in here early and just trying to keep you in to lose your money. When you understand this technology, and you understand that this is an emerging asset class that only happens about, I think we get new emerging asset classes once every, I think, 150 to 300 years. Our last emerging asset class before that was gold, and that was about 1820 to about 1850, and that was only a regional based asset class. So people came over from all over the country to come to Arizona, California, New Mexico, Texas, all those places to mine gold. You were either the miner going to find the gold, or of course there were some people who took the initiative of selling shovels and pickaxes and helmets. So where I'm going to make this reference to you is that I'm going to put that in the same play. Do you want to be the shovel pickers and sellers? Or the shovel sellers and pick sellers, and sell to those individuals to go mine in the mines? And those people did do the best. So I'm going to refer that to accumulating and DC dollar cost averaging. So whether that be, for those who may not know who dollar cost averaging, that's $5 a day, or $5 a week, $10 a day, $100 a week. It doesn't matter. The same time, every single time, at the exact same, or not the exact same price, but at the exact same time, every single time, no matter if price action is or low or high, usually those individuals do the best, because time in this market, any market, is virtually not possible. So also quickly, we're gonna hop over to our Wyckoff distribution, kind of just give whoopsies. Give some quick little breakdown on that also. So we saw phase A, phase B, we saw that as well. And let's go down and see. Oh, here. So sorry. Let's go up. So we see the accumulation, the uptrend, the distribution, the downtrend, and so on. So each of those are broken down exactly in here. For those who want to research further, I really do highly recommend it. It really does change. It has changed a little bit in my perspective of how long term even I can navigate. And this is something we need to get not used to, but this is something that I think was very, very important to know. So let me hop into our THR real quick. I just got some lines drew up for our key support levels, and our key support levels, and also the ones that we've set up, and also that we've now broken through. So we've seen, and we know with these resistance levels that the harder you push through, and the harder we push through these levels, it becomes more stable, and that becomes official support. So we've seen now that we've had this downtrend for quite a bit. We broke through all these levels of support, fell pretty hard, and there's a reason for that. We've talked about this a couple weeks back, is that we didn't have enough time back here. If you really do go back and look at this chart, we didn't have enough time to build up these support levels. So look, so we had 25k, we were there for, oh my goodness, let's do a quick little check, right? So we were at 25k for about, oh whoops, that's not the chart I wanted, so sorry. Go back and look. 12 days. That's not enough at all to establish official support at all. And let's go also to, let's see how long we established at the 39 level. Let's see how long we did that. Okay, look at that, another 14 days. That's not enough. That's not enough at all. Those are not solid support levels that we enjoy to see. And also, let's check at the 52 range when we went up. Oh my God, look at that, a week. So you can kind of see now that we did not really get these support levels to be solid. We didn't build the foundation. We blasted off. We continued to rally, and now we are what we call going into our accumulation phase. We need to go back and test these support levels multiple times. It might take some time, guys. I'm talking maybe a couple months, a couple weeks, possibly a little bit longer, to establishly support these levels, and that's okay. We've talked about lengthening cycle theory from Benjamin Cowan's YouTube channel that we take, and we've talked about diminishing returns. We can still get the same return that we are expecting. It just may take us a little bit longer. So that's why I always mention, really, time is our best asset in this point, especially if you are a younger individual like yourself, and even if you're a little bit older, guys. Like time is really your best asset when it comes to this. So the longer time that we spend in some of this accumulation phase, and we keep breaking through these level 1, level 2, level 3, and we close weekly candles above these, showing that we have hard support, then we can continue to move upward and continue our ultimate path. But definitely right now we just have not spent enough time when we were rallying to build these official levels to call these official backbone support, and that's what we're seeing now, truly on the technical side. I know this isn't the news we want to hear, and I know people hate hearing bad news. It's never a good thing, or it's never good to hear bad news at all. No one likes to hear it, but this is really just the truth. So now let me stop all the bad news and let me get to our bullish case scenario. So what can we expect in the good term? So the good term is we have lots of updates. We have EIP 1559 and other ZK rollups coming for Ethereum. We have the Lightning Network for Bitcoin also being installed. Bitcoin's first upgrade, the Taproot, in like the past 4 years. Bitcoin's going to be getting a major upgrade, which is very, very rare, which does not happen. We see the China FUD, it can be flipped around. We see the hash rate coming out of China, going to more stable countries with a little bit more freedom, and giving them more incentive to mine. Not every country is against this. We've seen that down in South America. We've seen that here. The United States is lagging on the ETF, but they are quickly realizing that hey, this is something that isn't going away. We've talked about Lindy effect. This is just more of a kind of a big wave of refresher that we're having right now, as we have been in this downtrend for quite a while. I understand that it's been quite a bit. I understand it's hard. Look at that. That's very hard. Do not get me wrong. I understand how you guys feel. That was all of us at one point. That was me at one point. I've been through this quite many times, and this is something that every cycle is different, but they do all rhyme pretty hard. So definitely my closing thoughts before getting out of here, and before getting out of here and releasing this out to you guys is that take a step. Don't be on here every day looking at this price action. Don't wake up and check and get absolutely overwhelmed by this and worry about day to day, continue your day job, continue your work, chime in, keep listening, keep updated with the news. We follow the action, we don't follow the talk from a lot of these individuals and these guys, because that's exactly what they want you to do. They want you to follow them, not making action, and they really want to shake you out, guys. They really do, and I promise you that. And that's exactly that's exactly the pressure we took on when we took on these institutional investors and these high net worth individuals. We understood that, hey, $1 million, $5 million, $10 million is not a big make or break to these guys. A lot of these bigger dudes could care less. They sleep well, losing a couple $1 million. That's not a big deal to them. But to us, 100, 200, 300, 1,000, that's a lot of money to us. We got bills to pay, we have other things, we got kids, and other things along the spectrum that a lot of these older guys and these other bigger, higher institutional players don't have to deal with. And they have nothing but time either. They could wait all day, for this. While you, on the other hand, you can't. You're trying to do exactly and get exactly where they are, so you can either buy your house or support your family, or move out of your state, or start a new company, start a new business. It is the exact same initiative coming into play here. So ultimately, really, what I want you guys to take from this is really just be patient, continue learning, continue being resilient, stay up to date with your knowledge. I really advise, don't check this price daily. It will literally drive you crazy. I say that from experience because I used to do it. It drove me crazy, and I sometimes lost my mind. I was like, what is going on? Why is this not doing this? And sometimes technical analysis works until it doesn't work. There's a lot of TA guys who haven't, they've been wrong, and it's very hard, to predict the outcome of this market. But we know in the long term, we know on that rainbow chart, we know on the long term, we know where this is going. We know that Bitcoin has been the best performing asset out of everything on the planet. We know that it has an upward trend and it hasn't failed. We know that bears have always gotten trashed every single time they say we're going to zero, or we will never recover from this. The COVID crash is a great example. We had this issue literally not too long ago, about about over a year ago. Well, it's been like 14 months now, 13 months since we've hit this bottom of our COVID-19. Back here, I think Bitcoin, I think they went down to $400, $600. We have been through this, guys. We have been, and I know it's psychologically tearing. So for everyone who bought in high, or you're really having issues. I'm not your financial advisor, but I really do advise you guys to take an emotional approach, take emotions off the table, take the data, take the metrics, take everything that we talk about weekly on this channel, and just apply it to this. Start DCAing. This is a great time for accumulation, and this is where a lot of people made a ton of money. So those who were back in 2017, 2018, DeFi summer, it's what we call it, when DeFi wasn't exactly what it was now. So most of these projects on decentralized finance were not around in the summer last year, a year and a half ago. They sprung up out of nowhere, and those guys who had the resilience and took the time to continue fighting through bad news and trusted the technology and continued to fight ultimately did the best. Those who are patient are always rewarded, and that really is just the fact of the matter. So thank you guys for chiming in today. I know this, I tried to keep this under 20 minutes, so I think I did exactly that, and I'm just making sure I didn't skip over anything important. But this was definitely something the video I felt encouraged to make, and I will continue to do it because it's a habit you got to install. I think it takes 30 days to build a habit, right? You do it every day, and then it becomes a habit in your mind. This cycle, market psychology is a habit. You have to adapt, and you have to train yourself to say, okay, all right, this is what's going on now. Let me look back a couple months or a couple weeks ago and see where we were, and let me take that knowledge and put it into the day. And now let me think in the future. Let me think a year or two from now, or even 8 months from now. Let me put myself in a more relative future situation, and really continue to apply this to my journey. So thank you guys so much. I really appreciate you guys' time, and especially if you stayed the whole time. Thank you guys extra. I will see you guys on Tuesday. Any questions, concerns, please, put them in the Patreon, send me emails, DMs, or anything. We will be okay, guys. And you guys know me. If I was extremely concerned, I would be letting you know that a lot more urgently, and also a lot more aggressively, I guess I'd say. I'm not sure, because I'm not usually a really crazy, go, this is it, like I'm not in here making crazy updates every time the price drops too low. So thank you guys so much for your time today. I will see you guys on Tuesday. Thanks so much.